Welcome to Trading Lounge on the 7th of January. We're looking at the US indices and starting with the SP500 here. Now we have moved above this in terms of the trading levels. We've moved above the 2,500 here, and that's representing strength. It doesn't have support on that level yet. This would just be the breakout or the first high above the level. So there's two normal ways of doing this. The market would move up, it would react from a large number, obviously the volume and traders think in certain numbers, and then would get the first high above the level. Then normally the pattern goes in terms of an ABC coming back here, retesting demand, and either failing and continuing down or moving back up at this stage and then moving up from there. The long trades on this obviously are these highs here, and we can bring those down until we get it in place here, but we need that first high to come into place here, which is here. There is a variation on this. I call this the classic trading levels pattern. The variation of this is the arrival, the reaction, the first high above the level, and then the A, the B and the C would normally just sit on top of the level there and then move up. But we've normally got it covered because we've got the first high above the level as a trigger and then the second one here at this space here. We can also look for trendline breaches as such here as well. So there's a variety of ways to get in here, but we do need to establish that the market is going to sit on that particular number. This current count that we have here in terms of wave 3 up here, an A wave here, an A and a B and a C for the B wave here, and then looking for 5 waves down here in terms of 1 and 2 and a strong third wave here. And then we were looking at this being the fourth wave here because we've had a 3-wave move up into this space here, and also reached the 38.2% retracement level. So we were trying to look for evidence of a move down through here, and we've had short positions in here and we've had a short position in here as well. So we brought our stop down to the top here, and then we brought our stop down to this point here, and we've been triggered out here now for all our short trades, and we should have one long trade in here now, and we can look at that at on the hourly chart here. However, even with this scenario through here, I've got this now as an A wave here. In fact, that A wave can be, well, it can sit there as well, but we can sit it here as well on this high here. And I kind of like that too, because this is where this never made a new high above here, but on the NASDAQ it did, just by a point or so. And it can be counted as an impulse wave to the upside with an A and a B and a C for the B wave here. Not that it's a big deal if you got it here or here. Okay. The other point here is that this move up through here, we're looking at it in 5 waves so far. So let's go in and have a look at these 5 waves. But before we do that, I also want to today point out 2 other counts as well. The other count which we will look at is a much bigger bear market count, bit of a grizzly bear scenario, and the other one is that we have wave 4 sitting over here. So I'm going to present those 2 cases, and I think it's important, you know, this is what we make the videos for, is to explore all the wave counts, and once we've sort of understand and got them all in the hat, and we're on the table rather, and we're looking at them, then we can come up with ideas of creating trades, because at the end of the day it's about taking money from the markets rather than being right or wrong. I mean, of course it's good to be right, but we only learn from being wrong in most instances. So the strategy is if not in the same as importance as the analysis, or even more, I find it more important actually. But let's go into the hourly chart here and just have a quick look at this scenario through here. So I know that we can count this up through here in in terms of corrective moves to there to get to wave A, and we can also have wave A over here, but I can count 5 little waves over here, so to justify it, it counts quite nicely the way that I've got it, with wave 1 here having the extension in it, wave 2, wave 3 being smaller, but wave 5 being even smaller in this case truncated here, and in the Nasdaq it has made a new high here. So this also counts down here nicely as an A and a B and a C wave here for a B wave. Not that any of this is important now because it's hindsight, but we can learn from hindsight as well, of course. So our main situation now is to look at this little structure to the upside here. So it's quite clear that we've got wave 1 and 2 in play here, and then wave 3 and wave 4 and wave 5 here. So we don't really need any of these in here now. If you're long on these triggers here, that's fine. We can put the stop just here for the time being, and we don't need that, but I'll use that over here, and we don't need that there, so we'll just tidy that up a little bit. So the safe trade here, and you may have even gotten a better position in here as well, but just for the sake of it, we'll leave it where it is. So what we're looking for here now, and we'll look at this in more detail, but 1, 2, 3, 4, 5. So once we've got those 5 waves in, then we are looking for a move down. Now, we're either going to get a move down and continue to move down from here, or quite simply, we're going to get an A wave, a B wave, and a C wave that will probably sit somewhere in here. We can look at the 50-60% retracement level after that, but then a move to the upside here. So we need to be prepared for both of them. So the one to the downside, once we've got the 50-60% retracement level in play, once we've got that high here, which we can see that it's going to be quite close to being in this space here, so on that 2500 there, so that makes life a little bit easier. So even when we do move down through here, we're going to see a bounce off here anyway, and then if the market decides to move through here, it's going to come through and it's going to retest it back up here. So then at that stage we simply grab this here, and then if that low is breached from here, then that will trigger us on the short side and we'll be on our way again. Okay, so we need to be covered in 2 ways. We can also bring this down here onto this low here as well, and we can also look at cutting through here as well and even getting a better position and so on, and we can look to refine all of that. But over the next session we should see wave 3 and 4 and 5 finish off, and then into this move here. So this is where we need to be mindful of here. So just to look at this little structure in here with a bit of detail, we'll go to the tick chart and then we'll look at the other counts that we've got. So if I've got wave 4 here, then I can count 5 waves up here, and then down here, as we counted before, we had 1 and 2 and 3 and 4 and 5 here, and then I was looking for this to move up and this to move down, then up to here, and then move down from this point, but we never got that new low coming into place here. So markets moved up there for whatever reasons, but in terms of counting, we do have this now as an A and a B and a C wave here with 5 waves in this particular structure here, so as wave B here. But what I wanted to point out was just to give us a bit of clarity on this here. So we've got a nice wave 1 here and 2 here, and then 1 and 2 and 3 here and 4 here, and going up for 5 here. So this could be no, that's okay. Yeah, it could be adjusted to another degree upwards, but the point here, if that's a top here, then the 38.2% retracement level is here. So we can have this here as an A. This has got 5 waves in it here, so an A wave here. We can have this as an A and a B and a C, and then for the B wave, and then down for the C wave. So we can have that low in place and our first little impulse wave up here. So if there is a new high coming in through here, then you can take that high and just trade to the upside based on that. But otherwise it can come down to 25.15, the 38.2% retracement level, or the wave 4 of 1 lesser degree. So be mindful of that. And the upside target here would be the 2550 area here, and of course it can go higher than that there as well. So, but you always trade to the closest largest number because it can start to top. In fact, number 8 here in terms of the trading levels, so the 48 here is where most of the orders are going to be start building up in there, so you just need to look at the market depth for that there. But taking it at number 8 is always a nice way just to be clear and to, you know, move out and get on with some other task in your life. But anyway, that's the main number there, and it can certainly move higher than that, but that's that. So what I want to do now is I want to have a look at the grizzly bear side of things, the more bearish picture within the market. So I'll just go to this chart here. So don't need that little floater up there. So in this case here, we've been over this before, but not quite like this, but 5 waves down for wave 1, an A and a B and a C here for wave 2, and then the bigger bear market would look like this here. So from wave 1 to 2 here, then we'll look all the way down for wave 3. Now look, this may not be the case, and you know, you can throw tomatoes at me and that's fine, but I just find that I have to look at all the counts, and then we can pull them apart and so on. So in this scenario here, we can look at this as wave 1 and wave 2, and then wave 1 and back for wave 2, which would also be from this high here, would be that coming into there. That brings us, as a wave 2 here, it brings us into the 61.8% mark here. But we're still looking for those little 5 waves up there, as I've mentioned before. But what it does mean here, if it gets locked under here, you know, after these 5 waves here, it just could come down as an ABC pattern here, and then it can move off from that point, as I mentioned before. But if it locks under the 25 again, then sure, we could have our previous wave count, which would take us down to wave 5, but it could also pick up a lot of speed here and give us this wave 3, 4, and 5. So this would be the third of the third wave would be moving into here. So quite a strong sell-off here. I don't know if that's the case, but here's a count that presents that, and we need to be mindful of that here. Okay, so yeah, there's 2 counts to the downside there. Now, the other count that that I want to put in place is I think I've got it on the 15-minute chart here, or have I got it? No, that's right. Yeah. So, okay, right. I know what I've done. So let me just bring a bit more of this in here. So, in this case here, look, I actually like this, and we talked about this on January the 2nd. So the same scenario with wave 3 here, and an A wave here, A, B, and C for the B wave here, and then 5 waves down here. So the 5 waves down would count like this, and we're going to go into a little bit of detail here, so but more so on the tick chart here. So we've got a clear 5 waves down here for wave 1 and back for wave 2, down for wave 1 here, and then an A and a B and a C for wave 2 here, and that fits in, whoops a daisy, that fits quite nicely actually. And then all the way for wave 3 here, and I'll show you this on the tick chart in a minute, because I've pulled this apart with a fine-tooth comb here. So wave 3, 4, and 5 here for the third wave, and then the 4th wave in here, and then down for the 5th wave in here to make wave 4. So having a wave 4 in place here already. Okay. So, you know, I'm too old and crusty to marry a particular wave count. This is why the setup's important. I don't like, you know, I do miss things, but most of the time I'm kind of okay with it, you know. So in this case here, we would have the wave 1 and ABC for wave 2, and then we would have this here in terms of 1 and 2 here, and 3 here, and 4 here, and 5 here, and then we'd have wave 1 and 2 here, and ABC back here, and then moving up there again. So in this case here, we would have this, copy this here, wave 2 here, So if this occurred here, then this also puts us into a strong wave, third of a third move here as well, doesn't it? So we would need to be mindful of this scenario here. So on the long side, we can have this really bullish move here as well. It may not be the case once again, but at the same time, we need to have long trades sitting on this side of it over here when the time comes. So we'll either be going long or we'll be going short. So let me just, this is my tick chart for this scenario here. So I mean, I kind of like that low being in place. So if you've got a keen eye, you'll have to be sort of on the case here a little bit. We can see that the move down through here, well, I can see that it's 5 waves, and from here to here, we've got a nice long third wave in the middle here. This is the third of the third in here. So we've got the beginning of the trend, the middle of the trend, and the ending of the trend, and then wave 2 here. This also is 5 waves here. But it also, the thing I like about this here, it counts quite nicely here as 1, 2, 3, 4, 5 here for the A wave, A, B, and C for the B wave, and then 5 waves up here for the C. So it makes a nice ABC pattern rather than a wave C as such. So it kind of fits nicely within that space. And then from wave 2 here, it's a bit of a case of wave 1 and 2, 1 and 2, and 1 and 2 in here, and then 3, 4, 1, 2, 3, 4, 5 for the third wave. I mean, I just label that because it's something different, so I could see wave 3, 4, and then 1, 2, 3, 4, 5 for the third wave here, fourth wave here, fifth wave here for the third, the fourth, and the fifth for the third. So we've got a nice we're in the third wave here, and we've got the thirds of thirds waves in here, so it's just strong and powerful. And then we've got wave 3 here, 4 and 5 here, 1, 2, 3, 4 and 5 here for the third wave, fourth wave pulling back to the fourth wave of 1 lesser degree here, and then we go down to the next level here. So we've got 1 and 2 here, and this is the third wave here, and this is actually 1 and 2 and 3, 4 and 5 here for the third wave, the fourth wave, and then 1 and 2 and 3 and 4 and 5 for this one here. So you can see that I've pulled it apart quite a bit here in trying to get this to work here. So then that brings us down to this fifth wave of the fourth here. So we can actually be in play here for a much more bullish move to the upside. And also too, if we look at some of the stocks that are guiding us in this here, Google, for instance, here, sure, there's different ways to count all this. I could also have this as a wave 5 here, but we're just, all I'm going to do here is just, this is one count. I can see that it can be counted in other ways. But what we'll watch here is we're going to start watching this move to the upside here now, because, and probably even trade it a bit now too. So this is 1 and 2 back to here, right? So this can be a third wave moving up through here. So this is what we're going to watch in this space here. And also too, we need to look at Amazon as well. And I kind of like Amazon. As you know, I like to use it. It's a bit of an elephant in the room. So in this case here, what I sort of like about this is it's the same pattern as the SP 500. So we could look at this as the A wave, an A and a B and a C for the B wave here. Okay, so the question is here, do we, with the SP 500, of course, we're looking for wave 1 and 2 and 3 and 4, which is pulled back up too high because the 38.2% is, just roughly speaking, is below here, below the 1500. So, if it was going to be a wave forward, I'd expect it to, start to fold from at least this number here, but it's got itself above here, in fact. So the other point here too with this is that if I can just clean these up a little bit, we would have to look at this move down through here as wave 1 to this low here on this here. So when we take this here and we put this here, I'm giving it the most space as possible. We could put it here, but I'm looking at this low here in 1, 2, 3, 4, 5 here for this low here. So if this market pushes up through here, if it does, then it overlaps wave 1, and it's gone a long way to do that. So so this will help. A move a little bit higher in here will help confirm that this wave 4 is in place here. It's not confirmed yet. I'm just sort of shooting the breeze here a little bit, but that's the way that we can look at that as such. So the other point here too is that if we take this top here and this low here, we're currently at the 61.8% here now as well. So, it really needs to stop here. So any further upside here is really going to, help confirm that low being in place here. I don't know what I've done on the 4-hour chart, probably nothing. All right, okay, yeah. So, obviously I've talked about this, when I talked about those things before, when we had like the arrival, the reaction, the first high above the level, and then the A, the B, and the C wave here, or the variation is the first high above the level, little ABC back in here, and then moving up here. So these patterns here, this is most common, but this case here, we've got the variation here. So taking this long trade through here was... I obviously talked about this before because I can see I put a line through here, and it's possible to count 5 waves down here as well. I mean, I can count from 5 waves from here to here. I can't count them. I need to look at this more closely, but we could look at this as wave 1 here, and then wave 2, then 1 and 2 and 3 and 4 and 5 here. But there's also a case for having this down as wave 1 and A and a B and a C here, or in fact not even that count, it would actually come into here. I won't go into that now, but what I'm saying here is that these lows here, once they're breached here, then we've got overlapping wave structures, and we should be looking at a more bullish picture at that stage. So the next two sessions are really going to help us confirm which direction we've got in the markets. Okay, that's all I've got to say today. Thanks for tuning in.